Hey, are you a business owner, entrepreneur, or professional? If so, we want you to apply to be a featured guest on our show. My name is Adam Torres, and I host the Mission Matters series of podcasts. I've recorded over 3,000 episodes, and we are just getting started. How do you know if you'd be a good guest to be on the show? Well, only one way to find out, and that's to apply, but I'm going to let you in on a little secret. We want guests that have a story to tell, guests with a brand, a product, or a service that can benefit my audience of listeners. If this sounds like you, go to missionmatters.com and click on Be Our Guest to apply. I'd love to talk to you and get to know more about your story. Again, head on over to missionmatters.com and click on Be Our Guest to apply. All right, now let's get into the show. Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. And if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Become a Guest to Apply. All right, today I have on Jason Parr, and he's CEO over at Peisner Johnson. Jason, welcome to the show.
Hey, Adam. Great to be here. Thank you.
All right, Jason, so big topic today, and I'm excited to get into it. I've done quite a few interviews, and I'll be up front. This is the first one covering this topic, so that doesn't happen every day. I've done thousands of interviews, so I'm excited to get into this. So
awesome.
Today we'll be talking about what every business should be thinking about when it comes to their sales tax responsibilities. So we'll definitely dive into that topic. But before we do that, I'll start this show with our Mission Matters Minute. So, Jason, we at Mission Matters, we amplify stories for entrepreneurs, executives, and experts. That's our mission here. Jason, what mission matters to you?
Oh, such a great question. We love to help other people. I really feel like when you help other people, you help yourself in the long run. And we help people gain peace of mind when it comes to sometimes complex issues, but specifically when it comes to sales and use tax issues. And, one of the concepts that we teach a lot within the firm is collaboration builds confidence. And what I have found in my own life, in my own professional and personal endeavors, is a lot of times we kind of want to prove ourselves and position ourselves that we know something or we can accomplish something on our own. But what I have found is whether it's a mentor or whether it's just somebody else you respect or appreciate or value what they've done or where they are, speaking with others, collaborating with others always builds confidence in whatever decision that you're trying to make. And so that's something that's really important to us, helping other people through collaboration, providing them confidence and effectively peace of mind when it comes to big decisions that they're making in regard to their business and essentially what to do next when they understand better the responsibilities that they might have.
That's awesome. Love bringing mission-based entrepreneurs, executives, and experts on the line and really having them share what they do and why they do it. So great having you on. And I think let's just dive right in. So first off, if you would, give us a little bit of an overview of Peisner Johnson, please.
So Peisner Johnson is a state and local tax consulting firm. Next year will be our 30-year anniversary. I've been with the firm for 25 years. Started out as a staff assistant, and now I'm the president and CEO. It's been an awesome 25 years. Our primary focus is sales and use tax, and we even have a tagline. We call ourselves the sales tax people. But that's what we've been doing. It ranges in lots of different services, but it almost always relates to sales and use tax, property tax, some state income tax, but there's quite a focus on sales and use tax specifically.
That's awesome. And so I guess let's start off with what type of questions maybe that a lot of business owners, entrepreneurs, executives listen to this. So what kind of questions they should be asking themselves in relation to sales tax? So what's the first question they should know as they kind of go down this path?
So some of your listeners may know, and you may know, there was a big Supreme Court case. Listen, there's usually not big Supreme Court cases when it comes to sales tax. In fact, the last one was like 40 or 50 years ago. But just 3 years ago, in 2018, there was this big case, Wayfair, the online distributor of furniture and other things, against South Dakota. And the whole issue was around the idea of whether a state can require someone to register and collect their sales tax on sales that they make into a state in a remote fashion, right? So with the onset of e-commerce, you have goods that are coming into states, and states are wanting the tax revenue on those items that are coming into the states. Historically, it was always you had to have some level of physical nexus, as they called it, or some physical attachment to the state for the state to require this of you. But in this Supreme Court case, they ruled in favor of South Dakota. And essentially, what South Dakota said was, if you make more than $100,000 in sales into South Dakota, or you sell more than 200 transactions into our state, you're responsible to register with South Dakota and collect tax on those sales that are coming into our state. And essentially what happened since July of 2018, when that Supreme Court case passed, every state that imposes a sales tax in the U.S. has passed legislation which requires sellers to register in their state and collect tax based on these types of parameters. It's called economic nexus, and it's changed the landscape. It's always been tax. You should register and collect tax based on where you conduct business. Now it's all about where your customers are located. And so there's essentially three major questions that everyone should answer as it relates to their specific sales tax responsibility. Number one being, where do I have nexus? And this really comes down to each state's economic nexus legislation and what threshold, as we call it, economic threshold, is required before you're required to collect and remit tax.
And so where do you find like people kind of go wrong with this part of it? Because I feel like and again, so when they're going, maybe when they go to their accountant, when they go to something else, like they're of course getting their best advice they could there. But is it when somebody's like clients, like they get a bunch of inflow of clients at a certain area and they don't realize it, or like how does that go awry, if you will, sometimes?
Yeah, the biggest mistake any taxpayer or seller makes is ignoring it. We call it the most costly mistake when it comes to sales tax, because if you think about sales tax, I call it a margin killer. Let's say that, and you may not know it, right? You may not know the law that has passed in a particular state. You may not know that you need to register in more states. And in fact, we believe probably 90% of sellers across the U.S. doing business in the U.S. probably need to be registered in one or more states than they're currently registered in. It's a significant number of sellers that are probably not currently compliant based on all of this legislation over the last 3 years. The reason I call it a margin killer is, let's just say you exceeded the economic threshold in a neighboring state and you were supposed to get registered in that state and you didn't. Maybe you didn't know about it. Maybe you intentionally avoided it and didn't want to deal with it. Well, if the state comes back and determines that you should have registered, then they can actually impose that law on your business, and they can go back indefinitely for as long as they believe that you've been doing business or can prove that you've been doing business with your sales coming into the state. And so if you could imagine, you might have a liability, or you might be exposed at, let's just say $100,000 for a round number of uncollected tax that you should have been registered and collecting. Well, that tax can be anywhere between 6 to 10% of the sales that you made into that state. And then on top of that, they would collect penalty and interest on the uncollected taxes. That money comes out of your own pocket if the state comes to you and identifies that. And if the percentage you end up paying on those transactions ranges from 10 to 20%, and you're running a 10% margin, every year that happens, your margin is wiped away. So you cannot ignore finding out whether you need to register and comply in a given state.
Man, that's big news. And for everybody listening, like I get it too. So maybe they weren't, especially I argue as people move from, maybe brick and mortar and they add that online store and they're really excited about a particular product or something that might be, all of a sudden selling in some other states and they're expanding, and they maybe historically could be even a business that's been around for a really long time, right? And then historically they didn't really do business in another state, and then they go online, they're increasing their digital footprint, they're doing better, and they're expanding that market, and then this other part just maybe doesn't happen. And oh man, the scenario you just gave, it's a hurtful one, but I'm sure it happens. What's the next? Go ahead.
I was just going to say, we talk to companies every day that are dealing with this and trying to figure it out. What I will say is, obviously, our purpose in sharing this information isn't to make people nervous, because people should find out what the responsibility is. And sometimes they avoid it because they just don't want to know the number. But there are remedies that the states allow to be able to get compliant and voluntarily come forward and correct whatever your situation is. We work in this realm almost every day. We're helping companies get compliant. Our ultimate goal is to avoid out-of-pocket costs associated with doing that. If you have a willing customer willing to pay the tax, you don't want to have to pay that out of your pocket. And so there are answers, there are remedies. It's just a matter of let's talk about it so that you can collaborate with an expert in the area and figure out what's the next step for you, mitigating out-of-pocket taxes and penalty and interest.
And so the next, logical question is a business owner should be asking themselves, is the product or service taxable, right?
Totally, yes, right? So nexus is one question, and just because you have nexus does not necessarily mean you have a sales tax responsibility, because it also determines based on that state's tax law whether what you sell is taxable in that state. An example I often use is clothing. Some states clothing is not taxable. We're not always familiar with that because in a lot of states clothing is taxable. Nutritional supplements are another one, vitamins, nutritional supplements, and those types of things. Fully taxable in some states, taxed at a reduced rate. In some states, not taxed at all in some states. So it's important to know whether you have nexus, because nexus is the state's ability to impose their requirements on you. Number two, you need to determine is what I sell taxable? So do I actually have a responsibility to collect tax in a given state? And every state has a different tax law, which is imposed differently on different products. So it's just something, that's another question you need to find an answer to determine if you have a responsibility in a particular state.
Awesome. And then I guess the next question would be, how do they sell their product or service, right?
Totally. That's a third question out of the top three that need to be answered. And this is important because along with all of these laws that have passed over the last 3 years, again, there's 45 states plus the District of Columbia that impose a sales tax. And all 45 plus District of Columbia have passed legislation saying if your sales exceed a certain amount in our state, you need to be collecting tax on your sales into our state, right? So that's nexus. Then you're trying to figure out, is what I sell taxable? Third, along with that legislation that passed over the last 3 years, almost every state has also passed what they call marketplace facilitator laws. And essentially what that means is they've said the Amazons, the Walmarts, the Etsy's, et cetera, those marketplace facilitators are the responsible party for collecting and remitting tax on behalf of their sellers. And so if you sell on your own website, you're selling direct to consumers. You have the responsibility as a seller based on how you sell your products to determine whether you need to be collecting tax on those items. But if you sell through a marketplace, if you're FBA or fulfillment by Amazon, and that's the only way that you sell your products, then you might not actually have a sales tax responsibility, because even if you have nexus, even if what you sell is taxable, you have a marketplace facilitator that's collecting that tax on your behalf and remitting it to the state. So you mentioned brick and mortar earlier. You mentioned brick and mortar maybe moving over to online. The other issue you have is online sellers that are across multiple platforms. And it can get pretty complicated determining when you should collect and when you're responsible for that collection and when someone else is collecting and responsible for the remittance of that tax in another period. And just to back up a little bit on what you said earlier, it can be a company that's been in business for 100 years, has no online presence, but has always shipped products direct to customers throughout the country, right? So not your typical e-commerce seller, but it could be just a small outfit in one state, and they have customers in 4 states. Because of these new laws, which really capture a lot of online tax revenue that's been happening tax-free for a decade, right? It can also hit the small business that has customers in 4 states, but it's only registered in 1 state because that's where their warehouse or their manufacturing operation has been for decades. And so every company doing business in the U.S. needs to answer those 3 questions to ensure that they don't have a particular responsibility in another state who have passed these new laws in the last 3 years, and to ensure that you're not having to pay tax out of your own pocket with the added burden of penalty and interest or salt in the wound, so to speak.
Well, Jason, I have to tell you, this has been a great episode. I learned a lot. I'm sure some of the other people watching this learned some things, and now they're maybe going to do some reevaluation and have these conversations internally. And if somebody wants to follow up and they want to connect and learn more about Peisner Johnson, final question, 2-part question. So number 1, like, what types of businesses typically get the most value out of working with you in your teams? Are you only working with large companies, mid-size, small businesses? Like, where do you typically focus? Number 1. And number 2, how do people follow up to connect?
Oh, that's great. We work with businesses that may be doing less than $1 million, all the way up to businesses that are multi-billion-dollar businesses. Probably ones that get the most value out of what we do may be individuals or companies that don't have a full tax department or someone focused on the state and local tax aspect of what they're doing. Or they may have that, but they would like some additional expertise, or more importantly, that collaboration. So we do these free consultations, but when you tell someone that you do a free consultation, they automatically imagine I'm talking to a sales rep and they're just trying to sell me on something. Our free consultations have these, I call it a cheesy name, but they're called What's Next calls. And the reason they're called What's Next calls is because every time a seller learns about their sales tax responsibility, the very next question is, what do I do next? And that's where you can utilize us in a free What's Next call to collaborate about your situation. So I call it a discovery call, where we learn about you, you learn a little bit about us, we learn about your situation. And honestly, and I say this very honestly, if you have greater confidence and peace of mind on next steps, but you don't need what we offer, we're perfectly happy at the end of that call, because we've helped somebody gain some peace of mind and confidence in their situation. And so we want to talk to everybody. And so we always tout the What's Next call. And the way you can get a hold of us, really simple, the letter P, the letter J, .tax.
Fantastic. Well, Jason, really appreciate you coming on the show today and just sharing more about what you do and how you do it, and also all the great work going on at Peisner Johnson. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. Hope you learned a lot. If you did, don't forget, hit that subscribe button. We have many more mission-based entrepreneurs, executives, and experts coming up for you, and we don't want you to miss a thing. And Jason, thanks again for coming on the show. It's been a pleasure.
Thank you, Adam.